I took the time to find the top 3 Forex pairs for beginners, intermediate, advanced traders. And this means if you have one specific strategy, maybe something I never taught you, something you've seen on YouTube University where you searched and you searched and you searched for different strategies and you finally found the one for you. Well, guess what? I got 3 very high versatile pairs that will work for any type of trader. And that means one that trades consolidation, one that trades the trend, and one that counter trend trades, or one that just don't even know what they're doing, but you can still make money. And I'm gonna break it down right now. So very surprising, Gbp Usd. Now y'all probably like, why did you put Gbp Usd in here? I'm going to show you guys right now on my charts on why Gbp Usd will work for any type of style trader you are, from a scalper, from an intraday trader, swing trader, if you trade moving averages, if you trade indicators like the RSI, the Stochastics, if you trade supply demand, or if you trade just like me, Elliott Wave, ABC patterns, anything like that, this is what it's going to do. One reason why we are going to be using Gbp Usd is because this does everything. It consolidates very well, and it can consolidate for a very long time. Not only that, it can consolidate when the market is even going up. Prime example, you guys see how we're getting so much consolidation, little moves that's breaking out to create new highs, right? We understand that. This is a strategy that a lot of traders don't even know, but I'm gonna show you a strategy that you can use. But you have your wave pattern traders in here as well. So when it comes to looking at all of this, it definitely does justice. So let's go ahead and talk about first strategy, which is just going to be the moving averages. All right, so this strategy is pretty quite simple. You guys probably seen a bunch of different moving average strategies out there for a lot of beginners. Even if you do use moving averages, like I said, don't care. This is something that you can do. You first obviously want to establish the trend first. Is it going up or going down? And you're not going to use moving averages for that. So we're going to eliminate the moving averages completely. I don't want you guys to put the moving averages in there because that might confuse you. I want you to literally look at the moving averages for something else. Right now, what I want you guys to do is to ask yourself, is the market going up or going down? One great way to determine this is simply by seeing, hey, do we have major highs being broken? Do we have major highs being broken to create new highs? Do we have major lows not being broken to create new lows, which is what we call a higher low? If that is the case, that is when you guys can now say that, hey, this is now what I am going to do. Hey, this is an uptrend, or hey, this is a downtrend. Now, as you guys find these highs and these lows, you want to make sure that you are looking for the most effective high and low. So I'm on the 4-hour time frame. I highly advise you guys to look at the overall picture on the 4-hour time frame or on a daily time frame so you can get the full story. Now, as you already established your major highs and your major low, this is my major low right here. We also have a major low right here, and this is our major high. So we're going to simply wait on structure to break through any of these lows. Right now, we have a major low broken right now based off the 4-hour off of this, what we call displacement, just basically saying that it's an aggressive move going down right here. Now, as that happens, I want you guys to take your moving average. The moving average that I'm using is going to be the 50 MA. That is all I'm using. Nothing more, nothing less. The method is the SMA. You can change it to EMA. You can change it to whatever you want. But SMA is what we're going to stick to. So all we do is just have 54-hour length. You want to leave everything how it is. Length, put that at 5 if that is different on your actual chart. Now all we're going to do is hit enter, and then we shall see our moving averages pop up. Now that we have our moving averages, what we can then now do is scale on a smaller scale. Like I said, this works for scalpers, this works for intraday traders. Whatever I do on a 1-hour time frame, you do the exact same on a 5-minute time frame. You do the exact same on a 15-minute time frame. Nothing changes. So what we're going to simply do is head on a 15-minute just so I can show you guys what it is, and then we're gonna do the 1 hour. So now we're on a 15-minute time frame. Unfortunately, I can't go that far back to where I was at originally. It's just not gonna allow me to. But what I want you guys to determine is this. We know we're going down. The reason why I have you guys look at a higher scale is because I don't want you to get too confused when you notice the moving averages are showing you that, well, wait, it's actually going up. I should be buying it. Or I don't want you to get confused when you see minor structure is breaking highs and now you think it's going up. No, that's where a lot of traders get the big mix up. That's why I'm telling you guys, focus on a 4-hour and a daily. Now, here's the most important part. There's a lot of important parts, but keep watching this video. We're going to get into more bread and butter. If you don't like this strategy, I got you guys. So now after that, what we're going to simply do is wait on structure or wait on price to be below the moving averages. If we already established that the market broke this major low right here, we're going to wait on it to pull back. When it pulls back, it must remain below the moving average. So this pullback happened, it wasn't below the moving average. So we have to wait. When we see a displacement, we need to see market create this major aggressive move going down. After that, we need to see a pullback. When it pulls back, we need to make sure the moving averages are still below. This is telling us that this is going to be an active, strong downtrend. This is for all my trend traders. If you guys notice right here, we have a displacement, an aggressive move going down, and then we have a correction. It's pullback. Candles are still below our moving average. This is where we can now take this trade, and then how we're going to do this is very simple. We're going to enter right when we see that engulfing candle. So you see that the engulfing candle actually didn't happen until here. We're going to enter into two things you guys can do. You can go back on the 4-hour time frame, look for the next additional low. So let's say that the next additional low was here. We can take it to that low. Or another nice thing you guys can do is get out the trade until it passes the moving average, which would be right here. So if we were to take this simple trade from this entry to roughly around here, we're looking at about 55 pips if you're trading GBP USD. Now that's one way that you guys can go about this. The second way is getting the stochastics. Now the stochastic settings that I have is very simple. I am using the 14 length, the smoothing at 1, and then a de-smoothing at 3, and then the style, the upper band is at 90, middle band is at 50, lower band is at 10. That's it. Now what this is beautiful because, like I said before, GBP USD works very well with all types of reactions. So if we remove the moving averages, only focus on one thing, which is consolidation. Make sure you subscribe if you guys aren't subscribed, and like this video too. So right here, how can you tell when consolidation will happen before it happens? Very simple. All you want to do is either look for an equal high or equal low. If you notice that you spot an equal high or equal low, meaning that known as support and resistance, market came right back to the same area, never broke structure, came right back to the same area, never broke structure, you're in consolidation. Stochastics, RSI, TDI, any volume indicator that you guys use for those reasons, oversold and overbought, is perfect. When we spot this 2-move play right here, we're just going to wait for market to come oversold down here. So when you guys see market came oversold, we look for a pin bar, an inverted hammer. We look for any type of reaction in the seeing that the buyers are in, and then we can simply take this simple move. You guys can do 2 entries or 2 TPs. You can enter right when it's oversold. You have to wait on candle to form first. Once it does, you then enter, and then you can take it to that high, which is here, or you can take it to when it's actually overbought. Seeing that it was overbought here, you could have easily made a simple 130 pips if you were to do this strategy. This is why I like this a lot. Now I'm gonna do one more play for my people like me that trade Elliott Wave, but I'm gonna make this 20 times simpler. Okay, so now for my Elliott Wave traders, if you are known in the Elliott Wave space of zigzag patterns, which is a correction, you know that we have a zigzag pattern that looks like this, where you get 5 waves inside the A leg, 3 waves inside the B leg, which is all of this, which is a correction, and then 5 waves inside the C leg. Now, if you guys don't know anything about this, subscribe to my YouTube channel, check out some of my links, because I talk about this all the time on my YouTube channel. I talk about this everywhere. So all we do is find the most recent high, which is the most recent impulsive wave. We draw it to the end of the impulsive wave, which would be here using a Fibonacci, and then we just look at the -27 to 618. Wherever we see this -27, we TP to here. So let's say that my setup is I look for the equal high, I look for the correction, which is here. Once I spot the 3-wave cycle, which is 1, 2, and 3, I then now look for maybe a double top with an engulfing candle right there, or I talk about this double M mirror effect, which would be somewhere in here. You could enter in here. Guys, this is all I do in trade. Now this setup, you do see it on the 4-hour. If you see my chart, it's on the 4-hour, but this you can see spot on any time frame. So if we were to take this move, we will be looking at, since it's on the 4-hour, it's going to be a lot more pips, about 700 pips that we're looking at. Now, of course, if you're on a small scale, it would be less pips, but you just add a higher lot size to get about the same exact amount of money or percentages on a higher scale. That's it. So guys, that's one pair. Let's go into the next pair. This pair does very, very wonderful when it comes to structure. So anybody that is a strictly zone trader, if you only specialize in demand, supply, support, resistance, order blocks, I'm gonna show you guys how important this one is too. So I have this indicator here called order block finder. Like I said, if you trade zones, order block finder is one. There's a couple really dope other indicators out there, but if you don't use any indicators, you already know how to spot order blocks, cool, congratulations. This is just for people that just don't understand order blocks or understand full structure yet. Believe me, I get it. We're here to teach. So let's say that we already established that, hey, we got a high, we got or a low, and a low. We see that it broke displacement. Pullback. Once we get that first pullback after the displacement, we then now go ahead and start looking for the order blocks. So since we now want to sell it, all we're focusing on is the bearish order blocks, which is actually blue for me. So this right here, we have an order block printed here, and then we have another order block printed right there. So what we're simply doing is waiting on market to come back in this area. Once market comes back in any of these order block areas, we're going to look for an establishment reversal counter, like a hammer, shooting star, engulfing candles. We got an engulfing candle here, and we got an engulfing candle here. Once we get these engulfing candles, we are going to simply do two things. We can do a simple play to the most recent low, which could be either here, but if the market is actually in a major trend, you want to actually go further back to look at some of these lows that have never been tapped yet, which is these order blocks as well, and you can take it to those lows. That's one way of doing it. Now, if you guys are liking these strategies and you want me to actually do videos on these strategies, just drop strategy videos. Other than that, I'm just going to keep it moving. That's one way to do it. The other way to do it is very simple. You take the Fibonacci and you do the Fibonacci play again. You look for the most recent high, you draw it to the most recent low. Once you find that, you look at your two levels, the -27 and the 618, and you just take it to those. The reason why I like the Fibonacci play is because this is exactly where you will get a potential new low right there. Potential new low form right there by the -27. So that's the reason why I like USDZR. Now, the final one is going to be my favorite, and I say the best for last. The final one is going to be NASDAQ 100. I like this because everything that I just talked about, from the moving averages to the stochastics to the trend to the wave patterns, NASDAQ 100 would do it. And we all know it's very volatile. And that's the reason why I like it, because it's very volatile. And that is the reason why I gave you guys these three top pairs. So before you guys go anywhere, I want to give you guys the big bonus. Now, if you watched it to this part, make sure you do me one huge favor. Of course, like this video, but of course, I will be giving you guys a free PDF that you guys can use. You will see it in the link down there. You can go ahead and click it. It will give you pretty much access to the Fibonacci play, liquidity and Fibonacci play, which I just explained, but not as much details. But if you get that, hey, you got it, and it's free, of course. So guys, I appreciate the love and support. See you guys in my next video. Your boy Solo. Take care.